Thanks for joining us. I'm Marlin Bohling with you, and we are so glad you could join us here on the first trading day of a brand new year. Well, we're looking forward to talking with you here in 2022. Markets have opened up, and they are a little bit stronger. Let's review what we have here so far. So let's take a look at our corn market right now, and our quotes provided by Bar Chart show we are still continuing to have an upward surge here in the corn. We have March now 4 1/4 higher. We're now trading at $5.97.5 per bushel, basically about in the middle of our trading range here so far from the overnight trade. So a stronger start, and it's led by the nearby contracts, if that makes a whole lot of sense to you. We have the soybean trade, and let's go ahead and switch over to soybeans if we can. Well, maybe it doesn't want to switch over to soybeans. It seems a little reluctant to do that. Let me try one other thing. Well, I think I may have lost my connection here. In the meantime, I'll go ahead and bring in our guest analyst. We have a very special guest just joined us here this morning, and it's actually Chris Swift. How you doing this morning?
Doing great. Good morning.
Chris Swift of Swift Trading, and he is with us here this morning. He's from his office is here in Nashville. It's always a pleasure to have him come by. And I wanted to ask you here, Chris, the market over the weekend as we headed into it, Friday was very interesting. Every analyst, I think, that I worked with on Friday said, I wish we weren't bothering with this because it seemed like the market got all of its movement out of the way on Thursday.
Sure.
It seemed that way anyway because it made some big moves. So what do you think about that? Friday was just kind of biding its time, and now everybody is getting back in the game today?
Oh, I think so. End of the year, book squaring and making sure that you don't have any loose ends out there. And we came in this morning to a rousing market with grain markets roaring and some big changes in interest rates right off the bat this morning, where we saw the 10-year note and the T-bonds both trading sharply lower this morning. Looks like maybe the Fed is going to be starting their tapering a little bit stronger. And as we know that the Federal Reserve and the economy wants to help squash some of this inflation, that we're going to see more and more action taken by this administration.
So what does that tell you as we get deeper into the year? How much of a role is the interest rate going to factor into like the input costs on farming? And you know, we have the fertilizer situation right now. It's all getting kind of intertwined, isn't it?
It is, and it will be significant in the future, but probably not today. I think there's all kinds of opportunities to be able right now to lock in those products, especially interest rates. So it's going to be just the very start of it. We saw one big move down off the historical highs in the bond market. We've consolidated in that. Now seemingly we're starting to head back down again. The Federal Reserve has stated that those are their wishes, that they do want higher interest rates in order to curb some of this inflation.
Let's look at soybeans, and right now on the big board we have March soybeans trading 19.5 cents higher. We're at 13.58 3/4. Well, Chris, that's a dime off of our earlier low today. But on the flip side, how about that? It's a dime off the high from last night too. So kind of stuck in the middle. But that's a pretty strong start here.
It's a strong start and a good range for the day.
Absolutely. And of course, a lot of talk about conditions in South America, and that's a big concern here to the trade. How about this wheat market here, Chris? We have the Chicago March down 3 1/4 at 767.5. And of course, that has been a big concern here to the trade here as we headed toward the end of the year. And by the way, we have the Kansas City March now 2 higher at 803.5. And we also have the Minneapolis spring wheat trade showing March now trading 1 3/4 lower at 980.25. So it's just something that I think we need to keep an eye on. Kansas City is showing a little more strength here this morning, and that is where the weather has been kind of severe here lately.
Right.
So a bit of a concern moving forward. We'll have to keep close eyes on the situation there. We'll pause right here, and then Chris will take a look at what is going on in our livestock trade. There again, no information from USDA on Friday, so we're just kind of going like this today as we go into the new week, and we'll talk about that when we come back. All right, we're back with you, and we're talking with this guy right here, Chris Swift of Swift Trading, and he's based in Nashville. Now let's change our focus. Let's go to live cattle. Let's see what the livestock trade is doing here this morning. Well, Chris, we have February a little bit weaker. We're down 32 cents. 139.37 is our last trade. The February contract 37 lower at 144.45. You will note we don't have December on there anymore, so that thing finally dropped off. And now 139.37 on the nearby contract. That's basically about where we were on the cash trade, right?
Yes.
So what do you think? Now, are they going to separate again like they did here a couple of months ago?
They could. I'm not real sure what there is out there in the future to really make them jump ahead or really go down right now. That seemingly with beef prices where they are, and some information coming out this morning that the administration is going to attempt to do more to or for the beef processing in part of the industry in order to either relieve some of the issues they have there or potentially even increase some of the packing capacities through more subsidy programs and encouraging greater meat processing.
Seems like the biggest concern over the past year has been chain speed.
Yes, absolutely.
Just trying to get enough animals through there to meet demand. Do you see that being resolved?
To an extent, yes. Of course, more packing capacity will help, but the real issue is we're dealing with a virus that makes people sick, and those people can't come to work, and it's almost a natural phenomenon like that, and yet the government seemingly is trying to manipulate other factors when the real factor is going to be readily overcome when the virus dies down, we get more people back at work again, the natural formation takes place, but now we're interjecting more interference from the government in there trying to stop everything, and it'll just create more havoc than it will any kind of unity.
Well, the Gold Star winner last week was the feeder cattle market. Let's take a look at what feeders are doing here this morning. And on the big board, we have the March contract down 17 cents at 169.77. Is that the one you're focusing on, Chris, or do you go to April?
No, still January right now, simply because they all will converge to the feeder cattle index, and we had a large feeder cattle index movement on Friday that put it to 165.10, a new high from the April of 20 low.
Interesting. January is now 40 lower, though, at 166.47. Over on the lean hogs, these quotes provided by bar chart show February down a dime at 81.37. April up 12, though, at 86.85. All the deferred's a little higher. Does that encourage you?
It does. The hogs and pigs report was a little encouraging, so it doesn't look like we're going to have any kind of expansion anytime soon. Therefore, it looks like we'll have our hog numbers about the same. And, you know, carrying a $6 to $7 premium over the index is not uncommon, so that could change very quickly.
All righty. Well, we're off and running here in 2022. Thanks for coming in.
Absolutely. Pleasure. I look forward to a great year.
Oh, we always enjoy having you come aboard. So
Absolutely.
anytime.
Thank you.
Chris Swift of Swift Herding in Nashville. Janet, back to you.